I think one of the problems is that we've got a bit of a mental health crisis in our sector, in the financial services generally, and a lot of that is exacerbated by working from home, because a problem there can be something that festers, and it can be something that grows. It can be, oh, do I want to make that phone call? I might disturb them. I don't really want to disturb them. I'll just sit on it for a bit longer. Whereas if you're in the office and I'm sitting next to you and I've got, put the phone down, I'm a bit annoyed, you might say, Monty, what's up with you? And I'll explain it, and you'll go, oh, don't worry, I tell you what, I've had something completely, I had the same thing. Why don't you just phone them back and tell them this or do that? Problem gone.
Welcome to the Property Funder podcast. I'm here with Andrew Montlake, the CEO of Coreco. I'm not going to repeat the intro because we did that last time, and if you want to check Andrew out, you can find him at Monty's blog on the internet. Andrew, great to have you back here again with us.
Thank you.
Let's get started with a nice fun one. I hear you're a closet rock star, and that you're in a band. Is there a danger that as your musical career takes off that you might leave Coreco behind?
On the basis that I am not good looking enough or talented enough, I think it's safe to say that my rock star days and my dream of being a rock star has come and gone. Maybe when I was in our first band at 17, 18, there was a chance, but no, not now. But yeah, we're in a band, and have been for the past 10 years, called Rogue Monkey, and you can find us on Spotify and all good record shops. So we've released 3 of our own individual songs on Spotify, and yeah, there you go.
All right, well, Rogue Monkey, you heard it here. I'm not going to say
Don't judge
first,
me,
but certainly there's going to be some sharing of Spotify links in WhatsApp groups, I'm sure, very soon. Well, going back to matters more in line with business, certainly not mundane. What's your view for the future in terms of like 2025 mortgage market, property market? Where do you stand on the direction of travel?
Well, I like to start each year being cautiously optimistic, but I think for the first time, 2025 has the possibility of actually being what we all hope it is going to be. And 23 was an awful year. 24 started well and then sort of became a bit rubbish, but 2025 we've got a new government in place. They got a big majority. They're not going anywhere. You started to see what their policies are. It's a lot more stable. The US election is out the way. Yes, we've got Mr. Trump, which could be anything, we don't quite know, but at least it's sort of a known quantity. You've got a lot of global issues, which, although they are global issues, I think might be starting to come to a natural end, and that's being really optimistic. So actually, I think you've got the whole inflation, the cost of living crisis, which also is starting to come to its natural end. So I think you'll see 2025 pretty positively. I know a lot of the lenders that I've spoken to have been pretty bullish about it. You got changes to stamp duty, so the first quarter of next year is probably going to be busy. A lot of first-time buyers are going to want to get involved. The housing market has been robust. It hasn't fallen. All the people who said there's going to be a 20-30% property price crash has been proven wrong again.
35% moving home with Charlie. I'm sure you're familiar with his work.
Yeah, unfortunately. But yeah, again, these are people who are just saying things to get publicity, in my humble opinion. But all of that has been debunked. Look, of course it could happen. Of course we could see that. There could be an event, another black swan event that we can't foresee. But if all other things are equal, then I think 2025 is going to be a pretty stable year.
I think there's a lot to agree with what you said there. I think the only thing that concerns me is I am a bit worried about, in the UK, the government's approach to tax, the government's approach to business as well. I think that the things like the NI employers NI increase will have a negative impact on employment more generally, and I suppose there's a concern that with the changes to the employment rules that Labour are looking to put into play, and don't seem to have consulted with anyone other than trade unions on the rules that they're looking to implement. My concern is that that's going to maybe drive up unemployment a little bit. And so for me, if you have an interest, you need two ingredients for a house price crash. And you had both of those in the early 90s, which I guess was while you were at college, but you certainly would have been more aware of it than I was, which is high unemployment combined with high interest rates.
Yeah.
We've seen that we've been able to weather relatively high unemployment at the end of the GFC. Higher interest rates at the end of the GFC, which had lower unemployment, and we've seen that again now. Do you think that do you see that and see that also that there is a bit of concern there as like that could be the fly in the ointment, or are you relatively relaxed about the prospect of unemployment?
At this moment in time, I'm relatively relaxed. I think there's give there. So I think the unemployment rate is probably too low for a real healthy functioning economy. So I think you can afford that to go a little bit higher. I think there's lots of discussions about what's the true rate of unemployment and how many people are actually not working. I think we do have some fundamental problems in the longer term around workers and around will we have enough people, because the birth rate is really low, will we have enough people to actually work going forward and therefore pay taxes, etc., without some kind of, it's where immigration policy comes into play, but I don't want to get into that. That's highly contentious.
But we've also got 3 million economically inactive people as well,
correct,
right?
Correct. So how can we get that 3 million economically inactive people back into the workforce? How can we inspire them to contribute? I think that's going to be very important going forward. And we're still dealing with the aftermath of COVID and lockdowns. That's not going away anytime soon, and that might be another the next generation that really starts to see that change. And I think it will change back to a lot more normality. And by normal, I mean sort of the pre-COVID routine. It might not be 5 days a week in the office, but I think it will certainly be compulsory 3, maybe 4 for everyone. And I think that will help with productivity as well, because I don't believe people are as productive at home as they are in an office.
What's the arrangement you have at the moment at Coreco? Like, what's the number of days in the office versus the number of days people
so we're
work
around 3 days in the office for back office people. Brokers are a little bit different, and brokers are different. So obviously self-employed brokers, they can do what the hell they like, as long as they're compliant and they're looking after our clients and etc. We treat people like adults, and that's very important. But for others, it's around having some kind of structure and discipline, which I think is important around coming into the office, around working as a team, around making sure that you've got that help from people around you. I think one of the problems is that we've got a bit of a mental health crisis in our sector, in the financial services generally, and a lot of that is exacerbated by working from home, because a problem there can be something that festers, and it can be something that grows. It can be, oh, do I want to make that phone call? I might disturb them. I don't really want to disturb them. I'll just sit on it for a bit longer. Whereas if you're in the office and I'm sitting next to you and I've got, put the phone down, I'm a bit annoyed, you might say, oh, Monty, what's up with you? And I'll explain it, and you'll go, oh, don't worry, I tell you what, I've had something I had the same thing. Why don't you just phone them back and tell them this or do that? Problem gone. Whereas for working from home, that doesn't happen. I think it gets bigger and bigger and bigger. And there is a sense of isolation. And some people falsely look at that isolation as a good thing, when in my opinion, it's not. And certainly for newer people coming through, how do you get that knowledge? I learn every single day by the people around me, whether they've been in the business one day or they've been there 20 years. I learn from everyone because they'll do different things. They'll say different things. They'll have different ideas. But if I'm not around those people, it's just really me. Yeah. And you're missing out on all that wealth of knowledge from people. So I think it's quite a difficult one.
And in terms of younger people, are you finding that a lot of them are struggling to pick up the phone and they're hiding behind emails and texts?
Yeah, 100%.
How do you get them out of that?
It's around constant training and around constant, talking to them and making sure that they follow certain guidelines. Really, I think it's really difficult because people's communication skills, and certainly if I look at my son who's 16 and their generation, I'm really worried about how they're going to communicate in a working environment, because they're just not used to anything other than screen, phone. That's how they communicate. So the art of conversation is sort of dying a little bit.
Yeah. Have you ever? I don't know if you ever see it with your 16-year-old. I mean, I've got my oldest is 14, and if he goes and hangs out with his mates, if they're all having a meal together, they're all with their phones. None of them are talking. Yeah. Is it the same for your son as well?
Yeah, it's a bit like that. They're a little bit better when they go out. They're not quite that bad, but yeah, you definitely see it. And I hate going to restaurants where you look over at another table and the whole family are there and they're on they're on their phones. But look, hey, I'm pretty addicted to my phone, so I'm not the best role model in the world. Yeah, I'm trying, though.
You don't want to see my screen time either. That's that's really bad. Definitely very bad. No, that makes sense. I mean, in terms of but taking that a step further, where do you see sort of in the mortgage sector robo advice? Like, where do you think that it's going to take over, or do you think that for the foreseeable it's just going to be it's going to be person to person, and people ultimately want to be dealing with people?
Yeah, I'm a massive believer that people want to deal with people powered by technology.
Yeah,
they don't just want to deal with technology. And I think all the studies are showing that at the moment, especially if you're a first-time buyer, you want to talk to someone. You before you press the button on a deal, even if actually you're, and from some of the data we've seen, even if you're actually a seasoned remortgager, pressing that button on your own accord is quite a big step. And a lot of people just want that little tick of, actually, before I do this, is this really the best for me?
Yeah.
And I think that will remain. I think AI is really interesting and how that's evolving. And I think firms that really harness the power of AI can use it for good. But I don't think at the moment, in the foreseeable future, it's gonna replace the human. So technology can be harnessed to do all the heavy lifting to make the client journey be even better and smoother. But at the heart of it, there has to be human, and that personality of the human has to be better than just bland. And that's why I like people with personality.
This episode is brought to you by J3 Advisory. Recently, J3 Advisory assisted senior lenders in securing replacement structural warranties for 3 independent residential towers after the developer entered insolvency. Despite the challenges, J3 provided full reinstatement value coverage, supported by A-rated capacity, and issued the necessary structural warranty certificates. Do you need precise insurance advice for live and soon-to-be funded schemes? Get in touch with J3 Advisory. Learn more at j3advisory.co.uk. J3 Advisory is authorised and regulated by the Financial Conduct Authority. What would be one technological innovation you would like to see to make your life and your clients' lives easier? Like, what would be? Is there one thing or a series of things that you could change that you think would be transformational for the mortgage market?
I think if you see I think it's a house buying journey itself, really.
Yeah.
If you look at the work that Maria Harrison and the Open, I'm going to get this wrong, sorry Maria, the Open Property Data Association or something like that are doing. I think some of that work is really, really good. So the potential to, if you're buying a property, to when you actually put an offer in, to then get a pack that has everything you need on it, in terms of potential valuation, potential, all the local searches, all of that stuff done up front. And I think that will really help the process generally. I think making sure that you're using technology and whether that's blockchain technology to make sure that actually not everyone has to check ID so many different times. It's just check once and everyone has access to it. It's that type of thing. The process of going from I want to buy a property to moving into a property is just too slow. It's too long. It's too arduous. And that's the stuff that needs to be fixed digitally that way. The mortgage part of it is actually not that bad. We can get an application from, app to offer in a couple of hours sometimes if it's packaged right with the right lender. So that part of it is not really the issue. There are lots of little tweaks you can do there to make a broker's life easier, to enable them to see more people. But it's that end-to-end house buying journey which is broken, and that's what needs to be fixed, and that's where digitization can really help.
Yeah, I mean, the great example of that is that in certain London boroughs, it can take weeks for local searches to come back.
Yeah.
It doesn't make any sense to me why that isn't something that there isn't a sort of, it isn't digitized, and it's almost like the councils are hanging on to that as a source of generating revenue, and someone wants, because someone needs a job.
And that can be done up front by the seller rather than reliant on the buyer doing it and paying their solicitor.
And I guess you've also got to deal with the fact that you've got these conveyancing firms that are overworked, that not particularly sophisticated, and not able to respond to mortgagees or inquiries, right? So that adds just to the pain of the buying process.
Yeah, absolutely.
And in terms of talent pool, you're obviously talking about a lack of workers. Have you looked at or explored working with older workers, people who are kind of in retirement or semi-retirement for your business, particularly people who are, should we say, less afraid of picking up the phone? Is that a potential talent pool that you'd be interested to explore? Yeah,
we're totally whatever. When we put out job adverts, it's very much we will take applications and encourage applications from whatever background, whatever ages, diversity, etc. It's not something that we would not do. We have one of our guys has their aunt actually is an assistant, and she's an elderly lady, and that works absolutely fine. So it doesn't matter at all where that person is or what age they are. It's all about their ability to do what we need them to do. And there's a massive talent pool of people who maybe retired a bit too early, who might want some kind of work, and there's a massive talent pool of people from diverse backgrounds who look at finance and think, well, actually finance isn't for me because I need to be white middle class, etc. That's changing. That's not true. Finance is a fantastic place, especially the mortgage industry, to work, whatever your socioeconomic or ethnicity is. And that's a message we're really trying to get across, that actually you don't have to look or be a certain way to work in finance and be successful in it.
I think I saw a headline in Mortgage Introducer today that the FCA and the PRA are now doing surveys on how posh companies are.
We'll fail that one.
You'll fail, will you? What, too posh?
We'll definitely fail. No.
Not posh enough.
I don't know. Well, that could go either way.
Yeah.
What's how posh you are? So
yeah, I think that was the headline.
We've moved
anyway.
on from that. I think there was definitely that. Again, looking at when I started, there was definitely a bit of. There's so many stories around people. You need to change your name because it sounds too ethnic, or you need to get your teeth done, or you need to dress a certain way, or if you're not from a certain red brick university, then you're not going to fit in with our client bank. That is all absolute bollocks. People buy people, and I'm sure Stu wouldn't mind me saying he's a one-eyed gay guy. And he's bloody brilliant at what he does. He's got tattoos. His husband, he's got a beautiful family. He's adopted 2 kids. He's just such a great human being, and that's all that matters. He's really good at his job. But back in the day, would Stu have had the same opportunities as he does now? Sadly, not. And that's where we've changed for the better in our industry. And that's really, really important. Whatever your ethnicity, or whatever your sexuality, or even disability, it shouldn't make a difference at all. We need to mirror what our clients are, and I'm convinced that those companies who don't start to do that are going to be the dinosaurs of the future, and they're going to die out, because people look at companies and they want to see their attitudes reflected in the companies they do business with. And that can't just be a tick box either. You have to be passionate about it. You have to be authentic about it. It's not just, we support, Black Lives Matter, or we support LGBTQ+, etc. It's about actually showing that you mean it. And that's really, really important.
Yeah, I mean, it's quite interesting. We're having some discussions internally about ESG and DEI initiatives, and I think fundamentally, you drive those initiatives by being the change, not talking about it. I think that we've gone too far. I think we've almost gone too far in terms of talking about it and virtue signaling around it. But the reality is that, we're, at Avamore, we're a minority, we're a minority founded business, with diverse backgrounds, and, we have, and if you look at the makeup of the team, we've had, we have a broad cross section of society. We don't need to crow about that per se. We just go on and do it, but sometimes I think there's a lot of chatter about it, but then there's not a lot of follow up on it. And it's just, a lot of it's just virtue signaling. It's just like, actually, instead of crowing about it, sort of just shut up and do it, and that for me is how I feel it should be. So.
Yeah, it's quite interesting. And actually, the more I've got involved in this space, I've found that the companies that shout about it most are the ones who care about it least.
Yeah.
And there is so much good work out there. It's at the Barclays D&I Awards, which is like a life-affirming event. It's fantastic because you get to see these small firms, and they might come from companies where actually there isn't much ethnicity in their local areas, but what they're doing socially, and they're not shouting about it, all this stuff they're just doing naturally because the owners believe in it, is fantastic. There's so much good work out there. And what we've tried to do as Amy, and together with Imla as well, and the DIF organisation that Mortgage Solutions run is really get to grips with that and highlight all the good work that is actually going on in the industry and showing what can be done and how we can all be a force for change and a force for good.
I suppose on the flip side, though, do you think it's necessary for regulators to be surveying companies as to sort of essentially the sort of socio-economic backgrounds of the staff? You know, are we is this a level of of identity politics gone too far?
Yeah, it's a difficult one, that, isn't it? I think it's going to be natural to do that kind of thing until we get into a society where you don't need to do that kind of thing, because it just happens it just happens naturally. So I think I would. It's a really difficult one when it gets to surveys and how accurately that's going to be done and how many people themselves are confident to fill it in correctly and et cetera, et cetera. So I'm not sure about the accuracy of the data. And then more importantly is, what are they going to do with that data, which is the biggest question. And how is that actually going to be used for change? But I think where we are at the moment, change has to come about. Sometimes you have to force that change, and a little bit of forcing sometimes is not a bad thing.
Going to be a little bit controversial here, though. How far and how fast do we need to change in the context of, isn't the priority of the regulator actually that consumers are getting the best service and the best advice? Like, it's very important that we aim to have inclusive businesses and businesses that reflect our customers, but should we not be in a position first and foremost where the people that work for our organisations are the most talented and the best people and best trained individuals, rather than hiring based on certain characteristics first and foremost?
Well, the two aren't mutually. Actually, I'm going to get that wrong, aren't I? So I'm not going to use that phrase because I always get that phrase wrong. But the two can work in harmony together, because I guess if you're looking at it another way, is why are some people not coming to get advice? Because they don't see people
that look
who
like
they can relate to.
Yeah.
And so therefore there's a whole swathe of people who might be missing out because they don't feel comfortable in dealing with, a white middle-aged bloke, for example, from a certain private school, as to take it to the nth degree. So actually, if you're more diverse, then you're probably by definition giving better advice to a bigger range of people, because you're more likely to be empathetic to how they see the world and what their needs are. That's not always true. That's a generalization. Because I would say I'm a white middle class man and I'm pretty good at being empathetic and dealing with people from diverse backgrounds and wherever they're from. So I think, yes, a regulator's job ostensibly should be to regulate and to make sure that people do the job in the right way. But as part of a bigger social conscience type thing, it's about looking after the different types of clients, and how can we look after different types of clients from different backgrounds if we employ people who will never understand that type of client.
I think they're all really good points, and certainly not expressing any views, but certainly wanting to spark a conversation. So, yeah, I see strong merit in everything you're saying there. So, it's one that it's a debate that maybe we'll continue to rage for some time. As we talked about in the first part of the show, you recently were acquired by One Dome. There's been a spate of M&A transactions over the past 18, 24 months in the specialist finance arena. Do you think that's a trend that's going to continue? And what do you think are going to be the drivers of the mergers and acquisitions that keep taking place?
100% it's going to continue. From a broker perspective, because it's so bloody hard to make money. and it's as a mortgage broker, it's quite a low margin business. And if you look at how brokers have been in the firing line since sort of that Brexit position and all the different things have happened, and the last 2 years after COVID, the last 2 and 3 years have been relentless. Brokers are seeing more regulation. They're doing more work. They're having to rebroke cases 3, 4, 5, 6, 7 times. There's a more litigious atmosphere generally. Procuration fees haven't increased ever. So whereas you've seen lender fees increase over the years, proc fees are still basically pretty much the same as they were when proc fees started, a little bit higher, but not that much. PT proc fees are still woefully inadequate for the work that a broker does. And brokers are tired. They've worked really, really hard. And the late nights and the early mornings and the weekend calls is getting a bit much, and it's really hard. And that's my big fear for the industry. If we don't look after each other, actually the number of advisors, as we've already seen, is starting to fall. If you're a new person coming into the industry, why do you want to get into the industry? It's hard work. It takes a while to get a client bank. It's not as easy as it used to be. The income that some people perceive that they can, earn 100 grand within about 5 minutes, that's not reality. So it's quite an interesting environment at the moment. So I think you will see a lot more mergers, acquisitions going on, partly for that reason, and partly because there is strength in size and strength in numbers. So I think whether you're a smaller lender finding it hard to compete, especially when pricing is all over the place, if swap rates are up and down, if you get your funding in a different way, then it can be really hard to compete. So I think there's going to be more and more rationalisation, and certainly, I think there's quite a few who I think are in talks at the moment with various things, but whether that comes to anything or not. But yeah, I think definitely there'll be more of that in 2025. I think it'll be a really big year for that.
Well, I think that makes a lot of sense, and certainly there's plenty of scope for consolidation, a lot of opportunities for vertical integration. And I remember you talking to Gary Dass about insurance, for example, the having an insurance brokerage, acquiring a mortgage brokerage makes so much sense, because you've got that sort of recurring revenue from the insurance. Absolutely. But it's almost like the mortgage business is this incredibly effective lead generation funnel, and then once someone kind of gets into the insurance space, they then become that nice annual recurring revenue stream, because I guess people are you need to renew your insurance every year. You might only be doing your mortgage every 5 years, or even longer than that. So and
the good thing is that brokers are getting better at looking after their retention clients and starting to prove for the first time that actually that mortgage business is retainable. And tech has definitely helped with that, and we'll get even better. So now you're seeing mortgage firms with retention rates between 40 and sort of 80%. And when you're getting to the 60s, 70s, 80%, you're going to retain your clients every 2, 3, or 5 years. Then that's something else that we've never really had before.
Well, that was a debate that I had with Martin Stewart when he was on the podcast, which is his view was that mortgage brokerages didn't have value, and my argument was in line with what you were saying, which is that, well, if a client's has to renew a mortgage every at 40 to 80% retention rates, to my mind, mortgage brokerages are strategically undervalued relative to what the market is willing to pay for them. So, I think what you just said kind of emphasizes that. And certainly people who are, in the lending, I can see merits in a lender buying a broker, but actually, someone within a vertically integrated space like a wealth manager or like an insurance brokerage, for them, or even accountancy businesses, it makes a lot of sense in my mind.
Yeah, I get what he's saying. If you're a smaller company, if you're a 2-person operation or 3-person operation where the client base is mainly yours, and what happens when you step away? Where is that value to the clients, etc.? It's something we've tried hard to do. If you've got a certain number of people, if you've got a good brand, if you've got those ways of retaining people, if you're starting to prove that you're protecting them properly, you've got that recurrent income with general insurance as well, then actually there's value there. Because is Coreco going to exist if I step away from the business? Of course it will. They're brilliant people. They're going to carry on. People have bought into the brand. They haven't necessarily bought into me. As much as your ego would like to suggest it's all if I leave it's all going to go downhill. That's absolute nonsense. Coreco's a living, breathing entity in itself, so there's value there. So if I'm not there, it'll still be fine. And that's where you want to get a business to. You want to get it to a position where if the main people weren't there, would it still carry on? Would it still continue? Would it still retain clients? And if you get a business to that level, then there's value in it. And I agree. I think mortgage brokerages are undervalued, because actually when you get yourself into that position, then why can't it be looked at the same way as if you as a wealth manager?
Well, it's a great place to end on. We've got one final question, our closing tradition, and this is what advice would you give to your younger self? And I'm going to pick when you're in the post room at Young and Rubicon. So, what would you have told your younger self, and why?
So I would say be authentic. Don't try and be someone you're not. And I guess throughout your career, as you grow, you go through periods where you try and be something else, and that never ends well. So always always be true to yourself. You are who you are. You're a beautiful, brilliant, strange, weird, type of person. Whatever your personality is, embrace it and be true to yourself, because people see authenticity. And that's the greatest thing that people see. If you are true to yourself, then you'll go a long way. If you look at others and go, I just want to be like them, I'm going to spend my life trying to be them, you'll never be happy, because you will never be them. And I think that's part of what I've learned, and part of what I'm still trying to learn is just be happy in yourself. And that's really important.
Absolutely. Well, live your life, not someone else's life. That's a great mantra to live by. Andrew, it's been an absolute pleasure having you on for both of these episodes. If people want to find you on the internet, where can they find you?
They can find me on all over the place, any social channel. Andrew Montlake on LinkedIn, Monty's blog on X, The Mortgage Mentor on TikTok. So all over the place.
Oh, I didn't know you were on
Or
TikTok.
Blue Sky. Loving Blue Sky.
Are you on Blue Sky? Are you? Okay.
Yeah.
I haven't made the transition yet.
Yeah. So Mortgage Monty on Blue Sky.
Mortgage Monty. You don't have a at bluesky.com or whatever. You're just at Mortgage Monty.
Yeah, I don't know how it works yet. I'm still learning it.
And your podcasts? You want to give a plug to your podcast as well?
Yeah, the podcast. We've got the Coreco Couch, which is I'm loving doing that. We've got the Property Show and Pathfinders, which are in a bit of hiatus, but they will be coming back in 2025.
They'll be coming back in 2025 when you've not you're not overcome by the shock of the markup from your the other side's M&A lawyers. Yeah. Okay. Yeah. Well,
and the one thing I would say is check out Newspage as well, if you haven't already.
Newspage, okay.
Which is a really good way to get to get PR if you're a mortgage broker.
All right, that's great. A bit of advice. Well, I've been Michael Dean. I'm at property_funder. Please get in touch. A reminder that if you aren't already liking and subscribing our YouTube channel, our Spotify channel, or our Apple Podcast channel, please do so at the earliest convenience, and obviously give us a share as well if you have liked and enjoyed this episode with Andrew. One final bit of housekeeping. The first bit of housekeeping is thanks to J3 Advisory, the show's sponsor. J3 Advisory, if you don't know, provide latent defects insurance for house builders. And thanks to Avamore Capital, as always, for their continued support of the show. Thanks very much.
Thank you.
All right. Nice one.
Thanks for having me.
Thank you.